Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand today's trading action. Well, the GIFT Nifty trends were indicating to a positive start, but we've started absolutely flat now. 23,163 on the Nifty at this point in time. Of course, we'll be looking at a whole host of factors. Today is the expiry session as well, so it's going to be understanding how the options also will be moving today. Of course, overnight, it was the US Fed's decision on not changing any interest rates will also be a factor that the markets will be keeping in mind. We also have a lot of earnings that the markets and the stocks will be reacting to. Stocks like Tata Motors that have displayed earnings below estimates. Bajaj Finance came in better than estimate earnings as well. So some of those heavyweight counters will also be important. And remember, we are on the anti-penultimate day as far as the budget is concerned. So we will be looking at what budget-related stocks is something that you could be looking at. We have a special guest joining in, Mr. Devin Choksi, the MD of DR Choksi Finserv Private Limited, with us on the show. Warm welcome to you, Devin sir, and thank you so much for taking the time out. I first want to begin by understanding from you on the budget itself, since that's the next biggest trigger that we are looking at. What are the expectations this time from the budget? Do you think the markets are looking forward to some big bang measures that could pull the markets out of this 4 months of consolidation?
Well, good morning, Sakshi. I think the budget is, in my understanding, is going to probably focus on couple of aspects. One is implementation of the priorities that the government has already set. On one side, the priority has been for managing the fiscal deficit well. On the other side, restrict the government's borrowing while not compromising on the implementation of the infrastructure program and allocation of resources toward the infrastructure program. So that process is expected to continue. And on the other side, I think the government continuously looks at reviving the growth in the economy. Because I think for whatever reason in the last year, due to election, post-monsoon thereafter, and subsequently state elections, and RBI's reluctance to bring down the rate of interest, all these factors combined together in 2024, and which caused probably, I think, the situation where the growth came down in the economy. Now, the bigger priority for the government is also to bring back the growth in the economy so that the tax collections are also managed well, and at the same time, spending on the infrastructure happens regularly. Because of the spending on infrastructure, the government is basically also bringing a lot of foreign direct investment in the country through the global investors, and that takes care of the larger part of the program. So I think the budget is going to be focusing on art of implementation, as we call it as in a short form, it is AI, which is art of implementation. That is going to be the focus of the budget this time around, in my understanding, wherein they would systematically implement some of the measures in order to bring the economy back into the growth. That is what I understand.
Hmm. Devin sir, I also wanted to get a sense on what has taken place overnight. I mean, the US Federal Reserve has kept interest rates steady. Some are seeing a slightly hawkish tone right there. But a lot of cues are really coming in from the US, either from the new administration or from the policy front right there. There was this deep seek issue that, shook the tech stocks and the tech giants in the US as well. And therefore, we are seeing a ripple effect in Indian markets of all of these. How are you assessing, and as from the retail investors' perspective, are these really important to really look at, or should one continue to focus on their long-term investment journey and stick to fundamentally good stocks?
Undoubtedly, I think the long-term investment focus has to be there. This kind of situations will come and they will go. Volatility will happen because of these situations. You have reminded me to go back into the era of 2000, wherein dot-com related exuberance, I think, was demonstrated by the markets globally. Few survived and rest collapsed. I think that is the situation even in today's world as well. That when you have got a massive exuberance of AI-based activities, definitely, some of them will be shining stars, but I think many of them will unfortunately be victims of the current situation, where the disruption is going to be of highest order. So we are absolutely mindful about that situation, and that is where we believe and have been vocal about this particular belief that I think the time is right for those organizations who have got the capability to demonstrate their capability and survive and grow. I guess I think the big is getting bigger theory is proven at this point of time. The larger organizations will have better resources to manage this kind of disruption. Should
Right.
they operate? Should they probably I think, deploy the resources in proper manner?
Fair points, right, sir, and we'll keep that in mind too. But I was just talking about US Fed also, and I wanted to bring in the liquidity measures that this week we saw from the RBI. Do you see this as a precursor of what could come in terms of an interest rate cut, hopes rising high? On 7th of February, we will have the first meeting post-budget of the RBI as well. Do you think finally are we going to see that rate cut happen? And in case that comes in, will that be a big positive for the markets too, sir?
It's a hard realization. I think the because of the reluctance to bring down the rate of interest, the higher amount of interest cost started affecting the consumption in the economy. The corporates have shown reluctance to borrow money, and the retails have been paying through the nose the EMIs at a high cost. Now, when the economy is growing, I'm sure I think the consumption requirement is going to also go up. But at the same time, in this growth phase, you have to be mindful about not charging extraordinarily high rate of interest, even though I think the situation of inflation warrant you to charge. I guess I think you need to overlook that particular aspect till a point of time when you get develop the system of higher supply in the economy. Because inflation is coming out of two factors. One is a short supply or the less supply, and of course, I think the price rise because of that. Uh, in order to bring the prices down, I think you have the handle in form of larger supply that you require to create through the corporate manufacturing process. And at the same time, I employ ONDC kind of a network properly so that the supply side situation is basically adequate and the prices, I think, do not shoot up beyond a point. So inflation management should not be a monetary tool alone. Inflation management should be, I think, largely to do with the supply side of the situation. In my viewpoint, RBI, having said that RBI is two quarters late in implementing the rate reduction, I would like to think that maybe in February month's policy review, we are likely to see the rate reduction coming in, which will ultimately get percolated into the economy in following two quarters. So, in my viewpoint, I think even if it is late, it is a must. One needs to look at, I think, the progressive outlook on the economy side while talking about bringing down the rate of interest.
Understood. And what would that do to your outlook on banks and financials, sir? We've been seeing the Nifty bank inch up higher on the rate cut hopes now already in the last 2 to 3 sessions. Of course, earnings also have played a part. ICICI Bank came out with the earnings. Before that, it was Kotak Mahindra Bank that surprised with the earnings as well. Today, we are looking at how Bajaj Finance is going to be reacting again higher than the estimates. Overall, the banks and the financial space, what's your outlook here, sir?
Absolutely convinced to have the financials in the portfolio. They have got a significant amount of time correction, though they may not have got enough amount of price correction, but I think the time correction has actually neutralized the requirement of availability at compelling valuations. Most of the corporate banks, most of the NBFCs, some of the larger ones, of course, who have got the ability to manage their NPA well, like Bajaj Finance, and manage the cost of funds at lower levels, likes of Kotak, likes of Bajaj Finance, likes of ICICI. I believe that these companies are relatively better placed today. And given the situation that we are talking about, rate reduction subsequent quarters, in my viewpoint, I think these companies would probably be beneficiary. So if in last 6 quarters, if these companies haven't performed, one can safely assume that in next 8 quarters, I think these companies are expected to perform. So selectively, you remain bullish about the prospects, underlying prospects, and buy these companies in the portfolio.
I'll ask you about one more sector before the markets open, and that's the auto sector, especially starting off with Tata Motors that came out with another set of, weaker than estimate kind of earnings, led by JLR again. And what we've also seen is that brokerage houses are now slashing the targets, giving 660 kind of targets. It's already indicative of a 5 to 6% lower start today. Your sense of how should one approach Tata Motors, and vis-a-vis, we've also seen Maruti, Bajaj Auto, TVS Motors, all of them come in. How are you assessing the overall auto space as well?
I remain distinctly positive, including prospects for Tata Motors. They are passing through a great restructuring phase. Commercial vehicle company is becoming separate company.
Yes.
JLR is entering into profits. The passenger vehicle, electric vehicle portfolio of Tata Motors doing well. So, in my viewpoint, I think the pains are almost over. Maybe I think the requirement to have some more stability into the performance, in which I believe that in coming 2-3 quarters we are likely to see it at a higher pace. So I would remain distinctly positive about likes of Tata Motors, likes of Bajaj Auto in the portfolio.
Fair point right there, sir. Devin, sir, thank you so much for being with us in the morning edition. We'll get you back very soon. There was a very short time to speak with you today, but hopefully post the budget, we'll get more time to understand more about how the markets will progress.
Thank
Let's
you.
look at the market opening. 23,143. We've opened slightly lower below the fat line, 15 points lower in trade. But Tata Motors, that's the one that you need to look at. A 7.5% drop on Tata Motors right at the opening tick. 8% now at 691. Remember, Jeffries has come out with its lowest target on Tata Motors among all brokerage houses post the earnings. Jeffries has downgraded the stock to underperform from the earlier rating of buy. They have sharply cut the target price to 660 from their initial target of 930 earlier. Now, this is right after Tata Motors has reported a 22% fall in the consolidated net profit for the third quarter. That's weighed down by contracting margins at JLR, and at 5,578 crores, its net profit also has missed some of the estimates right there. What we are also going to be understanding is how some of the other stocks are also moving. Bajaj Finance on the brighter sides. In fact, it's opened over 4% higher. This is right after the earnings have come in higher than the estimates, and brokerage houses are also penciling in higher targets for Bajaj Finance as well. If we look at the Morgan Stanley, call, they have an overweight call on Bajaj Finance, and their target price they have raised to 9,300 on Bajaj Finance, and therefore you see a sharp uptick of 8,100 odd coming in on Bajaj Finance. Bajaj Finserv is also pulled up in trade. Sectorally, it's the real estate stocks that are garnering the attention. Small caps are also higher by 0.4%, mid caps up by 0.2%. You have pharma, FMCG, oil and gas, and PSU banks and infra stocks slightly higher. But what's dragged lower? It's the auto index, and that's largely to do with Tata Motors, the heavyweight stock, pulling down almost a percent loss for this one. Consumer durables are now down 1.4%. IT sector is just about 0.4% down. You also have the banks which are in the red at this point in time. Private banks particularly, which are down by about 1/10% lower in trade. We also have Arpit Beriwal, the analyst at derivatives at Wealth Management, Motilal Oswal Financial Services, joining in. Hi Arpit, morning to you, and good to have you with us after a long haul. Arpit, last 2 days odd or so, we're finally getting to know that, markets are not going to be just losing or bulls are not going to be leaving the ground and running away. There is some kind of a bounce back that we've seen. We're above 23,000 mark yet again. Probably the hopes are riding high on what the budget could entail. What is the sense that you get? Today's the expiry, probably the worst series that we have seen in a long time, and for January also as well. And we are going to be, in case we continue the decline, this could be a record breaking fact. The Nifty continuing to slide for 4 months in a row is something that we've not seen in the last 23 years. In case it goes on to end on 31st of January with losses yet again. We've already lost about 3 to 4% on the Nifty. What's your sense?
Very good morning. So if you see, as rightly mentioned, this series, start of the year has been quite painful. So after almost 23 years, Nifty has been forming lower highs on the monthly scale for consecutive 4 months. Now talking about the immediate setup wise on the weekly scale, so we have seen sharp correction on the Monday, and however small recovery was seen from lower levels from 20 to 800 zones. So on the daily setup, if you see the bigger trend is still in pain. However, if you see Nifty and Bank Nifty, both are consolidating in a broader range. So the major support for Nifty is around 22,800 levels. On the upside, 23,333 is the broader range. On the immediate basis, as we have monthly expiry for Nifty, Bank Nifty, Fin Nifty. So if you see the setup wise for the Nifty, immediate support stands to be around 23,050, while on the upside 23,333 is a major hurdle zone. So on the index wise, we are expecting a range bound move within this range, and as earnings seasons are already going on, so more stock specific action and sector specific action is seen. Along with that, if it's the Bank Nifty setup, Bank Nifty is relatively outperforming. So in spite of market fall, Bank Nifty bounces well from the lower levels. On the daily scale, this can form a double bottom pattern, and relative outperformance seen post the numbers of ICICI Bank and Kota. So as compared to Nifty and Bank Nifty structure is comparatively better, and the momentum can be created through the banking and NBFC space going forward.
Okay, got that. Let's look at some more stocks that are buzzing. On the positive side, we have Bajaj Finance. What would you say on this stock post the earnings have come in? 8,078 right now. Should one chase the momentum here? Earnings have come in higher than estimates here, Arpit.
Yeah, so if you see overall the NBFC space, in fact, this was a top pick from last couple of days. In spite of market fall in last 7 to 8 days, Bajaj Finance was holding strong. And from last 3 years, if you see the monthly setup, it was trading in a broader range. Finally, it has given a range breakout on the monthly scale after almost 3 years. That definitely signals a very strong up move going forward from positionally. On the weekly scale, also given a range breakout of about 7,750 and post the outcome of good set of numbers. I think setup wise within the NBFC space, this is a top pick, and as it is given a monthly breakout, so the target positionally from couple of months perspective would be very good. 10 to 15% positionally, 3 to 6 months view. On the immediate basis, also the setup is very strong, and definitely the stock can head towards 8,350, 8,400 zone. So Bajaj Finance would be a buy within this space. One can go around at current levels also with shifting stop loss near 7,900 for an upside move towards 8,350 and then 8,400 levels.
But let's look at the downside as well. Tata Motors losing ground after a weak set of numbers that have come in, disappointing margins as far as JLR is concerned. It's also one of the top losers right there, 8% lower at 695. This was already a stock where a lot of investors were feeling stuck, Arpit, because the stock had fallen sharply. It was not able to cross the hurdles. It has come down below 800 mark, and it was stuck in 730 to 750 kind of a range for a long time. But now these earnings have further dampened the sentiments. The stock is lower. Brokerage houses are giving 660 kind of a target. It's already lost 18% in the last 3 months. What would you say on Tata Motors for those who have it at higher levels, and for those who may be looking at this as an opportunity as well? What would you say?
So if you see overall the auto index has been quite painful, especially Tata Motors. If we see the setup of last 6 months, we have seen a decent correction in the stock. So from all the way from 1200, we have seen a good correction. Post the earnings also, if we see, we have seen a gap down opening. On the technically wise, if we see, it's a major hurdle is seen near 770, 780 levels on the positional basis. On the immediate basis, if we see, the stock is already 6 to 7% down. So setup wise, we feel overall that we should better wait because stock is still in downtrend, and I think the next major support comes around to be around 650, 655 levels. That is a monthly setup couple of years back. So I think current level better to wait. Don't try to bottom fishing. If the stock further corrects towards 650, 650 levels, at that level it would be a better risk reward to enter from an investment perspective. From a trading perspective, better to wait. Any closing above 725, 730 will change the setup for the stock.
Okay, got that. Let's look at some of the other stocks. Real estate stocks are actually buzzing. The index itself is up by 1.5%, and many stocks here are again up. Phoenix Mills, Brigade Enterprises, earnings factor here. Raymond earnings again 1.7% higher. Oberoi Realty, Macrotech up and about in trade. Last 2-3 days again we've been seeing a bounce in real estate. Of course, there is this hope that interest rate cuts could come in, so that rate sensitive factor is also moving up. But some of the earnings also that have come in are also positive. What is your own sense on how are you really looking at some of the stocks? Like for instance, Brigade Enterprises posted a Q3 net profit of 236 crores. That's a significant increase from 73 crores earlier that it had posted in the last year same quarter. So many of these mid-cap realty names that are also buzzing in trade. What would you say?
As rightly mentioned, as you've seen carnage in the product market and reality space was the biggest loser last week. However, if we see setup wise post the earning results, some pullback was seen. So first talking from the large cap space, I would like to mention about the DLF. So if we see the DLF chart wise setup, we've seen a good correction from around 800 levels to around 700 levels. However, on the daily scale, it has formed kind of a double bottom pattern and good recovery was seen from lower levels. So technically, it has recovered all its losses of the last week and strong bullish candle is formed. So setup wise, I think within the large cap, if we see a closing of 760 can definitely give a good up move towards 770, 780 levels within the large cap space from the real estate for DLF. Apart from that, if you see the setup wise for Brigade also, the setup wise it has seen a sharp fall, but on the daily scale again a double bottom pattern was formed and strong recovery was seen in broader indices. So setup wise, Brigade would also be a better because it has retested its previous breakout zone around 1050, strong bullish candle, negative formation, lower highs. So definitely a bounce back move can be seen towards 1200, 1220 levels. Generally, such counters are high beta, so definitely the movement will also be quite quick. So within the reality pick, DLF would be a preferred pick within the large cap and within the mid cap. If you see the Brigade also has good momentum towards 1200, 1220 levels.
Okay, let's look at the FNO band as well. The stock that's actually buzzing is KPIT Technologies. After the earnings yesterday, this stock has again found its mojo back. This used to be one of the stocks that used to be, one of the favorite stocks of traders, investors, about a year or so ago when the entire flavor was up and about. But the stock is now finally, after a long haul of consolidation, come back into the visible zone. 1475 right now, 7.7% higher. Arpit, what would you say on KPIT Tech? Can one still take an entry here?
If you see overall the mid-cap IT stocks has been a mixed bag. Selective IT stocks are trading in life high territories. However, certain counters have seen a decent corrective move. We're talking about KPIT. If you see the setup wise from last 13 weeks, it has been trading in a broader range between 1120 on the lower side, whereas on the upper side, 1550 is a major hurdle zone. So on the daily scale, strong recovery was seen post its earning. And now if you see the setup wise 1500 is a major supply zone where the stock is corrected couple of times from that zone. So look at the setup wise, we would wait. A closing above 1500 level would definitely open the room for another 7 to 8% rally. So 1500 is a major hurdle zone. A closing above that would trigger the short term rally towards 1600 levels and we'll wait for closing above 1500 levels for KPIT.
Understood. Let's take in the next question with you, and I want to bring in some of the stocks within the PSU pack now for you to really look at now, Parpit. PFC, REC have been again doing some kind of, showing us some kind of an uptick. Oil and gas stocks are up again, commodity-based stocks are up and about. Within the whole PSU basket, what would catch your attention?
If we see from the PSU space, first I would like to mention about the banking space itself. First would be the SBI counter itself. So if you see overall banking space have relatively outperformed. However, in the last couple of weeks, SBI has been in a range, but generally we have seen a good momentum ahead of his result season. So SBI, if you see the setup wise, it has been consolidated on the weekly scale. However, risk reward is quite favorable because it is near its major support zone near around 735, 740 levels and we can expect slow and steadily move towards around 777, 780 levels. So within the PSU space, within the banking space, SBI would be a preferred pick. Along with that, if you see Bharat Electronics within the defense space, the stock has formed a double bottom on daily scale after a good strong bullish candle for negative formation of lower highs trading higher and good recoveries in mid cap space. So I think BL also looks very promising at current levels because the stock has already corrected from 300 levels towards 260 and now again a pullback can be seen towards 280 to 85 levels. So I think BL and SBI would be a preferred pick within the PSU basket.
Okay. Let's also look at some of the other stocks. Broader markets are showing in some interesting names. Inox Wind Energy. Remember yesterday the stock was at a 20% circuit. Another 5% higher for this one as well. Let's also pull up Suzlon. Remember yesterday there was the earnings impact on Suzlon as well, and the entire renewable energy space was also in focus. Another 5% circuit today at 55 right now for Suzlon too. So this is one space that we will discuss with Arpit. Apart from this, what else is buzzing? You have solar industries again from the renewable energy space that's buzzing again. Then what else is buzzing is PTC India Financial Services, that's at a 5% up move. Ami Organics, so this specialty chemicals, fertilizer names were also buzzing yesterday, so we could talk about that too. Then you also have interesting stocks. Bazaar Style Retail, one of the recently listed stocks, is up 7%. JBM Auto from the auto ancillary pack is up. You also have Acme Solar, IFB Agro, NetWeb Technologies, another about 9% up. So we will look at these two stocks as well to see how things are moving up. Okay, let's take in one by one. The renewable energy space, sir. First, Arpit, what exactly catches your attention here? Where would you be bullish?
So if you see over the space wise, as we've seen decent correction in the entire market, the stocks have definitely corrected from high levels. So if you see from the renewable energy space, mainly if you see the setup wise of Inox Wind. So though it's a mid cap, small cap stock, the stock has corrected sharply from high levels from 250 to almost 160 levels. But if you see the monthly setup, the rally started from around 150, 155 levels, and it has definitely pierced on the weekly scale. Strong bullish candle is formed yesterday, and right now also is holding. So I think from the risk reward wise, after a sharp correction, definitely the stock can move again back towards 180, 190 levels. So Inox Wind, the setup wise is quite strong technically on the monthly and weekly scale, and the risk reward is quite favorable. So that would be a preferred pick within this space for an upside move towards 180, 185 levels in coming short term.
Okay, got that. Let's take the next question with you. And this is as far as some of the railway stock counters are doing well today. We were discussing the PSU space, and today Jupiter Wagons is up, and some of the other stocks are also rallying within the railway space. Is it again the pre-budget hopes that are rising for the railway pack now, Arpit? Would you be comfortable looking at the rail stocks right now ahead of the budget?
Overall, if you look at this actually setup wise railway stocks, the good part was that in spite we have seen correction in last couple of weeks, but railway stocks was overall trading flattish and definitely ahead of budget. Generally, this theme is in flavor. So within that space, if I see the setup of RVNL, Rail Vikas Nigam, so the setup wise on the daily scale, on the weekly scale, it has been consolidating. On the daily scale, it has surpassed its 200 demo, 50 demo. So I think a closing above 435, 435 can definitely trigger an up move towards 460, 480 levels. So the setup wise, it looked very promising. A strong bullish candle and definitely ahead of budget, some momentum can be seen. So within the railway pack, RVNL would be a preferred pick. One can go long in the range of 433 to 436, keeping stop loss of 450 for an upside move towards 480 levels.
Okay, got that. So that's as far as the real stocks are also concerned. Let us look at some of the other pockets then. What else is buzzing? Again, from the budget related themes, fertilizers and chemicals basket. Is that something that you're looking at closely also, Arpit? Yesterday, we did see a lot of stocks buzz, even in the specialty chemicals basket like Ami Organics, which is up again in trade today. Deepak Fertilizers was up yesterday. So the entire space is showing us some momentum, but without any clarity. What would you, how would your approach be here?
So generally, if you see in the last couple of days, you have seen good action in the chemical space. However, within that, major focus is on one counter within the chemical spaces, that is SRF. If you see the setup of SRF on the monthly scale, from last 4 years, it was trading in a broader range between 2300 to 2800 levels. And now this month, we have seen a sharp uptake of almost 21% rally. In spite, we have seen a decent correction in the market. So technically, with the setup wise, it is on the verge of the range breakout on the monthly scale from its polar flag breakout, and such moves generally trigger a rally for 15 to 20%. That's a quite big up move in coming weeks to coming months. So SRF technically wise is the strongest within the space, and this would be a preferred pick. So from a position wise, from an investment wise, as well as for trading wise, SRF one can go long. Right now the stock is trading around 2700 levels. So current level of minor dip towards 2650 to 2700. They can buy at current levels with keeping stop loss of 2550 for an upside move towards 2850, and then positionally 3000 plus. SRF would be a preferred pick.
All right, got that. The pharma space is picking up some action. 1.2% higher from the pharma space. Laurus Labs is the one that's leading. 6.2% higher. You have Granules, Ajanta Pharma, Ipca Labs, Oro Pharma. You also have Zydus Life, Cipla, Dr. Reddy's in the large cap space, also buzzing in trade. Let's look at this one as well, Arpit. How would you look at these pharma counters? I mean, pharma has been one space that's outperformed in the last year, top moving sector, and that's the only one that actually shown extremely bright in the last year's move. And many of the large cap counters are continuing that move as well, even after the earnings have come in this time. What would you say?
If you see over this pharma index wise, rightly mentioned, it has been a biggest outperformer. However, last couple of weeks, if you see, we have seen decent correction in all the
Yes.
pharma stocks. And I think generally, whenever we've seen a good correction in pharma stock, that would be a good time to entry on, because generally pharma stocks are a good value bargain at lower levels. So if you see the setup wise, Lupin was a preferred pick in the pharma space. And if you see the setup wise, after a sharp rally towards 2400 levels, the stock has corrected from higher levels towards 2000. And on the daily and weekly scale, it is trading near its 200 demo. So I think setup wise, the bigger trend of the stock is positive. However, we have seen some correction in last couple of weeks, because of which the stock is corrected. Now again back, it's near its 2000 levels. That is a major support zone, 2000 2050. So Lupin would be a favorable pick at current junction within the pharma pack, and relatively this counter is low beta. So this would be a preferred pick. Around one can go long in between 2050 to 2060, with keeping stop loss of 1980 for a slow and steady up move towards 2150 and then 2222, 2222 zones.
Okay, understood. But let's also, cater to the entire mid and the small cap space also, Arpit. This has been a space that investors have felt excruciating pain in over the last couple of months, where the drop has been far more deeper than what we have seen in the benchmarks. I mean, mid caps are down about 14-15% from their highs. Small caps have dropped about 17% as well. Even though some bounce is returning, some recovery is coming back in this week. How would you approach this entire mid and small cap basket? Any key stocks or sectors that you have on top of your radar here?
If you see overall, Sakshi, as rightly mentioned, we have seen decent, in fact, not decent, brutal correction in mid cap and small cap stock.
Yeah.
So more or less from the index wise, better to go on the sector specific wise. I think overall sector wise, chemical space we have preferred pick, that we've already discussed about from the SRF space. Apart from that, cement space looks good. So generally, we have seen whenever the market corrects, and if the stock and the sector is holding well, that is likely to be the next level of rally from within that sector. So in spite of market correction in last almost couple of months, cement stocks have relatively outperformed. So one out of preferred pick would be JK Cement. So if you see the setup of JK Cement on the monthly and weekly scale trading the life high territory, it has given a cup and handle breakout on the weekly scale. And I think from here on also, as market stabilizes and we see some pullback in the mid cap and the broader market space, so JK Cement, we can see another good rally of 4 to 5% in coming session. So JK Cement would be a first preferred pick. Second, if we see not from the mid cap but from the large cap pack, if we see Zomato was to be a preferred pick from the quite a long time. However, the stock has corrected sharply from 300 levels to 200 levels. And now on the daily scale, it has formed a double bottom pattern with good surge in volumes. So I think the reversal play would be very much preferred at current levels. So Zomato would be a preferred pick in the second space. Right now it is quoting around 220 levels. So I think the setup wise major support is near 205 for an upside move towards 230, 235 levels.
Okay, got that. That's an interesting one. And, what would you say on Swiggy also? I know there are, fewer days of charts that you have for Swiggy. But, Swiggy also came under pressure right from the time that Zomato declared its earnings. It, for a brief moment, also slipped below its IPO price as well in this week. How would you look at that?
If you see the setup of Swiggy, so from the where the rally started in November series from 450, 430 levels to 620 levels, now it has again taken support near its 400, 420 levels. That is the previous major support zone. So setup wise, I think the setup wise 444, it will be a major level. Any closing over 444 will change the setup for the stock towards 460, 465 levels. On the immediate basis, 444 is a major hurdle level. Compared to Zomato and Swiggy, technically wise, Zomato is relatively better place.
Okay, got that. So that's between the Swiggy and Zomato counters, how you should be really looking at that one. One more counter that all of us should look at is Whirlpool. It's down at a 20% circuit at 1260. For those who may be wondering what has happened, it's the parent company Whirlpool that has announced that they will be trimming their stake to 20% in the Indian arm, that's Whirlpool, that you can see today. And they want to become a minority shareholder and parent company of the consumer durables manufacturer has announced its intention to sell down the ownership stake. They have currently a stake of 51%, which means they are a majority stakeholder. Now they want to trim it down to 20% by mid to late 2025. So it will happen during the course of this entire year. By end of 2025 is what they expect. And of course, what we did see is that earnings also release happened, and this is right after the company has been selling a stake even last year as well. So slowly and gradually Whirlpool is actually looking down to pare their stake to minority. We are yet to find out whether they want to completely exit the stock at this point in time or not. So cannot comment on that, but right now you can see this knee-jerk reaction of 20% circuit on the lower end just because of this news. Arpit, would you say that investors, should be very cautious at this point in time for those who have the stock? Is it time to be a little worried, or should one stay put right now?
Yeah, so if you see the setup wise of Whirlpool, if I draw the major trend line support from 2018 levels, 2018 year, the major support comes out to be around 1180, 1190 levels, and that is a major support zone for last couple of years the stock has been respecting. So I think a closing below 12, 1190, 1180 will trigger the next downside move towards 1000 levels. So any closing up below 1190 levels, 1190 levels would create more pain for the investors. So any closing below that, then would suggest to exit the stock. Till that time, better to wait because it is near its support zone. So 1190 would be a key level to watch out for.
Okay, got that. So that's as far as Whirlpool is concerned. Now, Arpit, I would want to help. I want you to help our viewers understand your own research as far as the markets are concerned ahead of the budget. What is the strategy that you want investors to adopt on the index level, on Nifty Bank, and on several sectors and stocks? So we can deal with this one by one. Let's talk about the markets. What is the position that you want investors to take ahead of the budget right now? It's again 23,200, so we are back above that mark also. So good signs coming in ahead of the budget. We are on the anti-penultimate day. What's your sense?
Yeah. So first and foremost, we talk about Nifty. Nifty, as we already discussed, 20 to 800 was a major support zone, and we have seen a good bounce back from that levels. So technically, if we see it is still index is still trading below its 200 lemma. So that is overall a bearish sign. But if we see the setup wise, 22 was 800 was a major support zone, while at the same time 23,333 that was a major supply zone. Now that will act as a hurdle. So technically, setup wise, our view would be till Nifty holds above 23,050 on the closing basis, we can expect some bounce back move towards 22, 23,333, 23,400 levels. That is the outcome for Nifty. 23,400 would be a target, as you've already seen a good correction. So some bounce back move can be seen from lower levels. Along with that, if we see the territory data also, the long short ratio has been bouncing from 14 levels to 20 levels. And generally, whenever long short ratio corrects, bounces from lower levels, we definitely see some uptake in the indices. Now coming to the Bank Nifty, so Bank Nifty, if we see the setup wise, after a good up move in last couple of days, now it is consolidating. But the setup wise on the weekly scale, it has from a strong bullish candle. So overall, 48,000, 48,500 is a major support zone for Bank Nifty. On the immediate basis, 48,888 is a major level. And looking at the setup wise, as good action is seen in NBFCs and banking stocks, primarily in ICICI Bank, Kotak and Bajaj Twins. So I think definitely Bank Nifty can see a head move towards 49,500, 50,000 levels. So overall, our bias would be positive with key support of Nifty of 23,050 and major support for Bank Nifty would be 48,500.
Got that. And now let's dig deeper into the key sectors and the stocks right there, Arpit. Like we were discussing, the pre-budget rally was more or less missing in the entire January. But these fewer signs that we are getting just in this week leading to the budget. What's the sense that you're getting? Any key sectors that you believe should be on investors' radar, where investors can actually build on some positions to take the benefit of budget announcements, or key stocks?
Yes. So first and foremost would be from the railway stocks itself. So generally, railway stocks has been quite a theme with ahead of budget, and we have already discussed. So within the railway space, if you see the setup of RVNL, the risk reward is quite favorable. It has formed a strong base near around 420, 430 levels. It has surpassed its 50 demo falling supply trail line, and from here on, a bit of positive setup did definitely move. 8 to 10% rally can be seen within this space. So within the railway space, RVNL would be a preferred pick. Apart from that, if we see reality, so reality also has seen good some signs. We have RBI policy next week. Before that, we have budget, and definitely interest rate sensitive stocks have seen good uptick. And within that, if you see real estate, DLF is quite promising because it has come into the lower band of the channel. Good recovery from low levels, forming higher highs, higher lows, and from here on, classical double bottom breakout above 760 levels. So DLF can see a good move of 4 to 5% towards 790, 795 levels. So that would be a second pick. And third, if you see from the auto pack, so auto pack has relatively subdued mainly because of Tata Motor. However, if you see the setup wise, apart from that, autos like M&M. So M&M has been a quite a outperformer in last couple of months. So the stock corrected from 3200 levels to 2850, and now again bouncing from its major support zone. So it is a good trading stock near its support zone, and the risk reward is quite favorable. So M&M also we can expect good and steady up move towards 3000, 3050 levels. So this would be a preferred pick within the budget. So first from the railway, then from the reality, and third would be from the auto.
Okay, got that. So those are the budget related stocks that all of you can focus on. So Arpit has really shared with you the strategy on the index level and the key sectors and stocks where he believes the benefit could come in case you're looking for some opportunities. These are the stocks that you could definitely look at as well. All right, we are closer to winding up the show in the morning session, but we'll try and spot some more trends for you that you can keep looking at as we wind up this session. So we are looking at the realty space picking up more pace. 2.7% higher for the real estate index now, and we are at the high point as far as the realty stocks are concerned. Brigade Enterprises up 4.5%, Macrotech is pulled up pace, 3% higher for this one. Godrej Properties is also up 3%. Oberoi Realty, DLF, Sobha, they're all buzzing in trade right now. What else is pulling up? You have the pharma stocks, that's up by 1.1%. Small caps have also pulled up in pace. Now you see, look at the kind of recovery that you're looking at in the mid and the small caps right from the initial trading opening session today. So half an hour out and you're seeing those gains build on as far as the mid caps and the small caps are concerned, both at the high point of the day after that first half an hour candle is out. Now what are the stocks that are buzzing here? Jupiter Wagons shooting through the roof, 8% higher. JBM Auto 5.5% higher. Electra Green Tech. Okay, so I can just sense those EV related stocks also that are buzzing with some hope probably coming in the budget. Any announcement with related to EVs? And there you see Electra, Green Tech and JBM Auto, which we always refer to as those are the stocks that are closely linked to the EV buses, the auto parts that they deliver there when it comes to electric vehicles. These are the top two counters and you can see a strong buzz there. Railway, you have the EV related stocks, you have the real estate stocks also buzzing in trade, probably affordable housing. That's something that could be on top of the radar this time around. And there you see railway stocks, apart from even Jupiter Wagons, you have Ircon, Titagarh Rail, Railtel, Triveni Turbine. You have all of these stocks buzzing. Even the defense names are pulling up now. Garden Reach Shipbuilders is up by 3.3%. You also have the renewable energy names like Inox Wind really coming in strong too. So all of these themes are somehow or the other linked to what the budget announcements could be linked to, and therefore some momentum being finally generated. Let's come to Arpit right there. Arpit, where do you find confidence to build on positions within all the stocks that I mentioned from the small cap and the mid cap basket?
So as rightly mentioned about, there's a lot of momentum seen in the railway stock. So Arvind, a very good strong momentum, a classical range breakout on the daily and weekly scale. The stock can definitely head towards 460, 470, 480 levels. Apart from that, if we see one more stock that you have mentioned about the defense space also looking very strong, BAL can definitely head towards 280 to 90 levels. One more space that you have mentioned about the Olectra. So EV theme, if we see the setup wise, the stock is from a good base. Olectra, if we see the chart setup wise, on the daily scale, it is from a double bottom pattern near 1200 levels. The stock is already up by 5%. But setup wise, weekly scale is from the hammer pattern, and definitely looking the setup wise, a good pullback rally can be seen towards 1500, 1550 levels. So Olectra also looks quite promising within this space.
All right, Electra also looks quite promising on that space. Arpit, we'll thank you on that note for being with us in the morning edition and helping us navigate through various sector stocks and strategies on the markets right ahead of the budget too. Hope you have a great time till the time we meet you next. 23,200 is with us on the Nifty, viewers. Let's hope that this continues to build on positions, and the Nifty bank is still absolutely flat at this point, but let's see whether things also improve on that account. But many sectors and stocks, like I pointed out, linked to the budget theme, is now garnering investors' attention as we're just 1.5 to 2 days away from what the budget document could contain. Now, we'll wrap it up at that, but do stay tuned. Throughout the course of the day, you'll see earnings conversations, you'll see budget conversations, and of course the market coverage. So lots of action for you to really grab on Business Today television.
Hello and welcome. You're watching Royal Ranthambore presents BT Golf. I'm Sakshi Batra, and with me somebody very, very special, Advocate General. We have Mr. Gurminder Gary right here of Punjab. Thank you so much for being with us on this special conversation right here. You played with us. How was your game?
Oh, the game was nice. I mean, better than what I expected, but could have been better. Golf is always a game like that, I guess. It breaks your heart one day, it makes you happy another. So, yeah, pretty much happy to be playing. That's more important. Yeah.
That's absolutely more important. Do tell us, sir, how do you really manage to take out 4-5 hours from your busy schedule, the demanding profession that you belong to week on week to really come back here and play golf, and what does it really mean to you when you play golf week on week?
Well, golf means a lot to me. It's one of my most favorite passions. And it's not so easy to play it ever since I've got into this assignment, and I definitely want to play more. But I do manage to play about once a week, which is good enough, but which is definitely not good enough. So, yeah, I mean, as long as I can, I try and take out time because it's a beautiful getaway from our strenuous and stressful profession, and gives you some time off and gives you the time to sort of be around greens and
yes, absolutely. And this course is also very beautiful. Is this your home course?
Well, I mean, this and Chandigarh. I'm a member at both the courses.
Okay.
So I've been playing here a lot when I was an amateur because Chandigarh course is a very busy course. So once I got my hands on the game, so I've been more regularly playing at Chandigarh now.
Okay, wonderful. Which is some of the best courses that you've played in India and abroad, sir?
India, the most challenging course I've played on is DLF in Delhi. Yeah, I mean, it's a grueling course, and but it's also one of the most beautiful ones. And I've played at the ITC, I've played in Bangalore, and of course the courses around Chandigarh. And abroad, I've played courses in Indonesia, Thailand, I've played in Tbilisi. So, yeah, pretty much around.
But do you think that, in India, golf tourism is also picking up? That's something that a lot of people are focusing now on, that, players around the world should also look at India as a destination to play?
See, golf tourism is not only about golf courses. Number one, we have very few golf courses per capita. I mean, a place in Canada, a town in Canada or America would have about 10 to 12 courses around it, while a place like Chandigarh has say only about 3 courses, and one of them is not even a public course, it's an army course. Even a place like Delhi just has about 3 courses, which is very, very less. Yes. Bangalore has 3 or 4 courses. So that's not the kind of thing which can really make you a golf tourism destination. I mean, you really need to have more courses, you need to have more connectivity, you need to have more hotels, you need to have more companies getting into organizing golf tourism and giving them, things to do on the side. So I guess, India has, really got a long way to go before it becomes a golf tourism destination.
Absolutely. Yes. Do tell us, are young aspiring sportsmen really taking to golf? Are we seeing more pro golf also picking up pace?
See, golf, actually, I mean, there's a catch-22 situation. It takes a lot of time, and golf has become sort of a fashion.